Welcome back to Trading with CJ. Now, we've been covering a lot of different penny stocks on this channel lately with our brand new penny stock series, which we launched about a couple weeks ago. And yeah, it's been really fun. We've been making lots of different gains. Some stocks are great, some stocks not so good. And I hope you've all been enjoying that. But one part of my channel that I did say is I promised I would keep my original content as well. I'd still cover UK stocks, travel stocks as well, high risk portfolio and stuff like that. So today we are talking about a UK stock that has of course been hit ridiculously hard in the past year due to the global situation. So we're going to have a look at this stock and see if now is the time to buy. And if you enjoy all things stock market and investing, go ahead and smash the like. If you're new around here as well, subscribe to my channel. It really is appreciated. So we're going to jump into this one. We are talking about Hollywood Bowl, EPIC code BOWL. So Hollywood Bowl, if you don't already know, it is the largest bowling business across the UK nationwide. It has a market cap of around about 330 million. It's a bit more than just a bowling lanes. They also have the bars, the restaurants, the arcades, and they have this extra business now they're starting up called Putt Stars, so like a golfing business, which is going to coincide with Hollywood Bowl. Now, this is in the entertainment sector, so as you can imagine, it has been hit ridiculously hard in 2020, pretty much closed for a majority of the year or at some sort of social distancing, not full capacity. And if you don't know, we are currently in lockdown in the UK, version 3 or 4 now, something like that. So they're still not operating at the moment. So they have been hit ridiculously hard. I want to jump straight into this news article that came out a couple of weeks ago. Pandemic wipes out profits at Hollywood Bowl, as you can imagine. Annual profits of the UK's largest 10-pin bowling operator, Hollywood Bowl, have almost been entirely wiped out. Crazy times. Revenues for the company, which shut all its bowling alleys between March and August, fell almost 40%. And the pre-tax profits for the period were down 96% compared to a year earlier. 96% down on their profits, which is absolutely crazy. Now, they have managed to raise some money. They raised 10.5 million in share placing and another 10 million in the UK's government scheme that they set up. So there's some money there, which has obviously kept them afloat because they are still open now. We're going to jump into some of the numbers on this company, some price predictions, valuations, and some future growth as well. So in terms of its share price, it has started to recover. It saw a very nice recovery day in November, where it shot up around about 45%. And at this current time of recording, we are sitting at £2.04p per share. Quite low, but it's still quite far off from where it was pre-crash level. So if we go back to where it was pre-crash level, around about February time, we was around about £2.86 per share, and it crashed down a whopping 75%. Huge drop. Since that crash, it has gone on to recover 187%. So we've seen an absolutely huge recovery since those crash levels. And if you did buy at those crash levels, then you are sitting on some huge gains right now. I just want to put this out here. I do actually own this stock in my high risk portfolio, the one that I have on YouTube. A very small position, but I do have it in another portfolio as well. But once again, it is a small position, so it's definitely not by any means a large chunk of my main portfolio. But it is a stock that I hold nevertheless, and I am sitting on some gains on it overall. So if we look at where it is down from the crash at this moment in time, it's still down 28%. So it's still a way to go until the sort of recovery to the pre-crash levels, but it has already shot up a lot. And at this price, analysts are saying that it is 25.5% undervalued, which is an amazing valuation, and the fair value should be £2.74, which is getting closer to those pre-crash level prices. But the future growth for this company is something that I'm really interested in. In the next 1 to 3 years, it's predicted to have a 60% future growth, which is absolutely huge. We're going to look at its financials because we don't want to invest into a company which is extremely struggling. We know this is struggling, but have they got enough to stay afloat? Can they come out the other side? And what are the predictions going forward? Well, it currently has a revenue of 80 million and earnings of 1.4 million. So extremely low earnings as to be imagined. So yeah, that was its latest earnings as of its end of its financial year in September. So currently at 80 million. It's predicted to have by September 2021, so a year's time, well, just short of a year now, 101 million in revenue, and a year on from that, 140 million in revenue. So the predictions are looking really good. They're hoping that once we come out and everyone starts coming out of lockdown and the world eventually gets back to normal, we're going to see people going out and having some form of entertainment in their life, maybe a bit of bowling, a bit of golf, some drinks and some food. And we mentioned in the article at the start that it is making a profit, which is quite crazy. A 1.7% profit margin at the moment, which is down from a 15% profit margin. So that, it's a huge drop, but at the end of the day, it's still making a profit somehow. I don't know how, but that is good. It also doesn't have much debt at all either. 39.5% debt to equity ratio, which hasn't really changed from the pre-crash. Obviously, we know about the extra cash it got from the article read out at the start, but it has 39.5% debt to equity, which hasn't changed. If we look at the cash on its balance sheet, it has 20 million sitting in cash and short-term investments, with the debt being 29 million in total. So that's a massive amount of cash sitting there to pay off pretty much a lot of their debt that is on that balance sheet. So the financials, in my opinion, are looking quite good considering everything that's going on. And if this wasn't going on, it would be even better. So once we do come out of lockdown, I can see this potentially going up and up and up. Now, this did used to be a dividend payer, but of course, as with most companies, the dividend has been cut. But we could potentially see that reinstated in the future. I think they should put the money into focusing on growing the business, though, before worrying about paying the dividend. But yeah, no dividend at this moment in time. Something I do really want to pick up. So it's sounding quite positive, but this is where it's a little bit, puts me on edge about buying into this company if you haven't already anyway. And that is that insiders have been selling within the last few months. Now, it's pretty crazy. Not even the last few months, the last few weeks. So maybe they know something that we don't. And one of the insiders who sold was the CEO, which is not amazing news. £1 million worth of shares, or almost £1 million worth of shares, were sold within the last few months. And £400,000 worth of that was from the CEO. We also had this article come out literally a couple of days ago. Director dealings, Hollywood Bowl execs lower stakes. And this is where it goes into a little bit more detail with the CEO, Stephen Burns, offloaded shares, and so did the CFO, also offloaded shares. Two big high up positions within the company, both offloading shares. Why? We don't know, but it is not looking, it's not amazing news. You want the CFO, the CEO to have faith in his company. He's the one who's in charge of this company. You want him to have faith and be buying shares, if anything. But yeah, he has offloaded shares. However, on this deal, it does go on to say about some insiders who have bought some shares, or some directors anyway, who have bought shares. And there's a long list of directors who have bought shares as well. But yeah, two big positions offloaded. That's not the most amazing news out there. I want to jump into some highlights from their final results. And there isn't much, obviously we know it's been closed, so we're not going to be seeing huge numbers on here, but there are some good things on here. Once they was allowed to reopen, they have a strong customer demand and better expected performance in August and September upon the reopening, despite all of the restrictions in place as well. They traded at 66% of the previous year, and the majority of the centres were filling the 50% lanes that they were allowed. And average spending also increased by 5.3% from customers. They also had their successful launch of the new Putt Stars mini golf concept with 3 new centres opening as well. Obviously, they probably haven't been able to have much business right now, but there's 3 new centres open, and they also underwent another refurbishment on a Hollywood Bowl centre. They have a strong balance sheet, as we've gone through, and the cash generation, positive cash generation in August and September. So not the most amount of financial highlights, but there is some promising outlook on there, and they seem to be in a good position going forward for once they're allowed to open and operate. So where do I stand on this company? Well, like I've already said, I have shares in this company in the high-risk portfolio, which you guys can see, not much, and my personal portfolio. I haven't sold any. I am sitting on very nice gains from them. I managed to get in right at those lows. So yeah, I'm happy with the gains I've got, but I definitely will not be adding to this company. I think it has run up quite high. If it does see a big pullback off of some news, which maybe that's why the CEO is selling, then yeah, potentially may add to the position. But right now, I probably won't be adding. So yeah, it's not one for me at this moment in time, but I will hold it, that's for sure, because I do still think that once we can reopen, they're going to start seeing revenue, and this is going to pick back up. The financials are in a really good place. I didn't really think about this before as an investment prior to the crash, but after doing a lot of digging into them and seeing their financials and the way they've been growing, it is proven to be very popular. So yeah, I think it's a good investment if you hold it already. Would I add at these prices? Personally, no. But I am not a financial advisor. If you are planning on investing, then you should always do your own research first. And if you have any suggestions of some stocks you want me to cover, because I'll still be doing the UK stocks as well. I'm a UK investor. So yeah, let me know down below, because I'm happy to check some of those out as well. And if you found this video useful, interesting, or you just want to help me out, go ahead and smash the like. Subscribe to my channel if you haven't done so already. Thanks for watching, and until next time.